Today's Thursday, May 30th, and this is a trade review and a position I started taking involving the micro 10-year yield futures. The ticker symbol is /10Y, and as of the time of this recording, the 10-year yield is quoted at 4.548%. So this is the current candlestick right here, and what I'm showing is that these blue horizontal lines represent reasonable support and resistance levels. So the most local resistance level is 4.649, and the local support is 4.531. And a little below that, a little further below that, I have another one sitting here at 4.341. And what I did was just a little while ago, based on this chart layout at the 7-day time frame, I plotted out that the current market structure is inside this ascending channel. So very bullish, right? But then heading into today's trading session, price has been slowly fading to the downside for a probability that price may come down and retest this support level. So what I did was I am speculating that if price does come down, and considering that the S&P 500 futures as well as the NASDAQ and other indices are showing weakness, I'm speculating that this move may break even lower. So I started taking a short position. So if I open up Active Trader, my short entry is at 4.547. I shorted 2 futures so far, which is represented right here. And here's my entry price, as well as this being marked up as my zero line on the profit and loss side of this ledger. And what I'm showing here, this is an active order to close out the trade if price does run right back inside this ascending channel. So again, if price does run up, then that increases the probability that the uptrend would continue. So if I scroll up, my stop order is sitting right here at 4.572, which is equal to a $50 loss. So if or when price breaks above this price point, then this order will get executed, closing my trade, incurring that $50 loss. Now, on the other side of the trade, I have a limit order sitting down here, which is sitting at 4.447, and that equates to a $200 take profit potential. So it's sitting right here. Here's my limit order sitting at 4.447, which equates to a $200 profit potential. So essentially, I'm risking $50 to make $200. So that's a 1-to-4 risk to reward. However, I would love to add at least two more futures. If price does break above this area right here at 4.552, I'd like to add 2 more. So what I'll do is I'll go ahead and place an order right now. So there's my open order to add 2 additional futures. Now, this is to add these 2 additional futures. This is a day order, so the futures market will suspend trading later this afternoon at 5 p.m. Eastern. So if this order does not get filled, this order will then get automatically canceled. However, my stop and my limit orders are GTC orders. They're good till cancel, which means whichever order gets filled first will then automatically cancel the other and will stay active until one of those orders are executed. So essentially, this trade is on autopilot at this point. However, I really would like to add two additional futures here. Although I'm very tempted to add them right now and just. But anyway, that's the current status of this trade and my general thesis for a bearish move that may break below this support level over the next, few days maybe. So for the purpose of time, I'll pause it here and I'll update accordingly. So until that update, more to follow. So quick update. It's about 15 minutes after midnight, so the calendar is officially Monday, June 3rd. However, this is a status check on the 10-year yield short. So what I'm showing here are a couple of things. So last Friday, not realizing it was the last day of the month, Thinkorswim closed out my position, or TD Ameritrade closed out my position as my short was closed out right here, May 31st at 4:18 in the afternoon. So I thought I was still holding the same short position that I started taking last week. So you can see here that this is the short I initially took when I shorted those two futures, and then I added a third right here when price crept up just a little bit higher. So I had a total of three future shorts. But then Friday, again, because last Friday was May 31st, the last day of the month, TD Ameritrade closed out my position. So not realizing that until a few minutes ago, I re-entered my short at a lower price. So here I shorted three futures at 4.49% is my entry. I haven't updated this line yet. It's only showing two, but I am now holding a third. So it's quite unfortunate. I mean, it was still a profitable trade as price was coming down, but I was hoping I have held on to my original entry short back up here and not all the way down here. So if I open up Active Trader, since I've re-entered at 4.49, the trade's up $12. But I'm going to place a stop order up here as well, just to protect the trade in case there's a sharp reversal. But this is the current status. So with all things said, I'll remove the confirmation bubbles now. So what I did was I overlaid this gray channel, which appears to be the current market structure. If price or the yield rate continues decreasing during the duration of this trade. So that is the current status. And again, I have that support level here. If price or yield percent continues dropping. So I'll pause it again and I'll give it a few hours or until something more significant does occur. So quick update. Today's Thursday, June 5th. And although the calendar is still showing June 5th, now that the futures market has started trading almost an hour ago, this is officially the trading session for Thursday, June 6th. And as of the time of this recording, the 10-year yield is quoted at 4.279%. And we can see here that since I re-entered this short, price is broken below this local support level of 4.341%. And I did, at the same time, I've walked my stop order from a $15 protection to, well, just to put things into perspective, the trade is now up $633. So the spot price is sitting right here at 4.279%. So what I've done is I've walked my stop lower. So it's essentially sitting here at 4.384%, which is halfway. So that is a net profit of $318. If for some reason there's a major spike back up to the upside, I am guaranteeing that this is a risk-free trade still. So even though I wouldn't obtain that entire full profit, I'm still protecting myself with at least $300. Now, if the yield continues dropping, ideally I'd like to walk it all the way down to this support resistance level. But I'll just wait for price action to dictate that. If anything, I'll create an alarm, and if price does start creeping to the upside, I will start walking it down to this support level here. And maybe I should just do that now. Okay, let's do it. 431. So there. My stop is now sitting at 431. So it's a protection of $447. So just another update. Today is Thursday, June 6th, and as the futures market has restarted trading, it's officially the trading session for Friday, June 7th. And as of the time of this recording, the 10-year yield is quoted at 4.291%. And this is the current candlestick right here. So since the last update, which was around this time period after the yield hit a low of 4.272%. Price has just literally gone sideways. So heading into the last day for the week, there is that probability that price is going to start running up to retest this local support resistance level. So what I've done is I've walked my stop lower, slightly lower. So it's now sitting here at 4.323%. And this is just an alarm to notify me if price does cross 4.31%, that increases the probability that I could get closed out. Again, heading into the weekend, I'm not really sure if I want to hold on to this position anyway. So if I do get closed out, I want to protect the gains so far into this trade. And opening up active trader, the trade is up $600. It's lost about $35 since the last update. And again, because the price action is now seems to be going just sideways, I don't mind getting closed out at this point. So my stop order is sitting right here at 4.323%, which is a protection of a little over $500 in gains since entering this trade earlier this week. So this is the current status. Hopefully I'll do another update and the trade is moving to the downside even further. So until something more significant does occur, I'll pause it here and I'll be back in a few days, hopefully. So it's been about 4 hours since the last check on the 10-year yield trade. So what I've done is, because this consolidation phase is concerning me for a potential curl back to the upside, and because there's only one full trading day remaining for the week, I walked my stop order from 4.323 to the new stop order sitting at 4.3. So considering that price at its point right here, I'm okay with closing it out. If this happens to be the low point before price does come up to retest this resistance level sitting at 4.341. So if I open up active trader, the stop order is sitting here at 4.3, which is a $570 take profit. So from this morning, the trade is losing value, considering it was a little over $600 at that time, or essentially 4 hours ago. So I want to protect the gains as best as possible. So if price does come up for a retest, then I may consider taking a long position or continuing another pullback to the downside. It's something I'll reassess heading into next week's trading session. So I'm just going to pause it here and I'll do one final status check when this order is closed, possibly heading into the stock market open, but definitely I will be closing this trade out heading into the futures market close, which is 5 p.m. Friday. So I'll be back. So this is the final update. I am officially out of the trade. I was closed out on this candlestick right here. And the high of this candlestick hit 4.301. So that was enough to close me out. And if I open up active trader, the profit is $570. I have a zero position, so I'm out of this bearish position. So if I show trades, so here's the closing of my position. So if I expand on this, this was back at 133 this morning when that limit order was filled. So I shorted up here this past Sunday at 4.49 and was able to close it out at this point. This buy order here was initiated by TD Ameritrade as this was the last day for the month of May. So all of these positions were closed out. And I was closed out at 4.512. And then after realizing what had occurred, I re-entered my short at a slightly lower entry price at 4.49, which was still fine. At least I was able to pick up on that rather than waiting 2 days later and then price was all the way down here. So now what I'm going to be focused on, let me just get rid of these confirmation bubbles. What I'm going to be focused on right now or moving forward is that this appears to be consolidation phase. And if my assessment is correct, there is that probability that price will break to the upside, retest this support resistance level of 4.341. And at that point, what I'll do is I'll reassess the trade or the chart setup for a potential rejection and price comes back down for a second leg lower, or the probability or potential for price to break to the upside, possibly coming back up to retest 4.531 sometime next week, maybe. So that's what I'll do. I'll create alarms here. I'll do that offline. But that is the status of this little 4.5 day swing trade from this past Sunday to early Friday morning. So until the next setup, I'll see you.